a.m. Chicago time on Tuesday, the 18th of May, 2021. This is episode number 1995. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, as we bounce right into the convergent trading pre-market summary sheet, we see that there's a slight risk-on sentiment, mild risk-on, with the metals leading a little bit, silver and copper relatively strong. Gold is lagging. Of course, gold is really paying close attention to those inflation numbers. But gold is lagging. The cryptos are sideways. Sideways currently after pulling back. Remember, Bitcoin was at 60,000, currently at 44. Pretty normal pullback on that product, really. But leading the pack is silver today, trading at $28.73. That's pretty high, up $45, 45 and a half cents, or 1.61%. The euro is up. The Nasdaq is up 53 points this morning. The Nasdaq is outside of yesterday's RTH range. It's opening in a gap up. The S&P is not. The S&P is up only 2.25 points, trading at 4160, up 0.05%. The bonds, the notes are up 2 big ticks. The bonds are up 2 ticks. The Dow's only up 11. Crude oil, in case you didn't know, crude oil rolls to July today. Front month is July, trading at 66.28, unchanged, and the week product is the dollar today. We're still looking at the inflation issue. There's a lot that can be said about the inflation number from last week, which caused a blip down to 40.95 in the S&Ps, and how the market's responding to it. We could see it as quite a bit of strength, but I'm not a macro analyst, but just understanding economics. I have a minor in economics, but just understanding economics, the market is running higher, but consider in the analogy of a soldier rushing up a hill to take it. Consider that soldier took an injury. With CPI as high as it was reported, we'll see if it's an anomaly for April or if May carries forward these higher prices. With the flood of money, of dollars into the market, it is no surprise that prices are going to creep higher. Wages have to creep higher to compensate for that. And if wages creep higher, then product pricing needs to go higher as well. Manufacturing prices, PPI has to go higher, and so on and so forth. And that's likely to cause the Fed to take notice and start moving from what they call a transitory period to something that's a little more effortful. And we see that in gold trading near 1900. There's certainly some nervousness to how the market is moving forward. So just remember, that's what it means. Just because we kind of shrugged it off and moved back up, it doesn't mean that the quality of the move back up will be the same as it was, say, a month ago. So just keep that in mind. Anything to do with the Fed speakers becomes important, because now the market is likely to listen carefully for changes in the verbiage that the Fed uses. The DAX is down this morning, down 16 points. The Euro stocks are down, so the European indices are a little bit down. But other than that, we see the market has climbed a little bit higher. Still trading within Friday's range in the S&P, as well as the Nasdaq and other products. We're still inside of Friday's range, so we haven't really done anything. We'll talk about that here in a minute. So far, the S&P's traded 180,000 contracts. The inventory is about 92% long and there's quite a bit of volume above that closing price from yesterday. So 23.5 points of range, and overall the volume is okay this morning. It's shaping up to be probably a relatively sluggish morning. The big thing this morning, of course, is Walmart's earnings. We got some big numbers today. It's retail earnings week. Macy's came in. Macy's came in with a huge surprise, was expected to show a loss of 41 cents and ended up reporting a gain of 39 cents per share, a swing of 195%. Walmart came in with a 40% upside surprise on their earnings, 4% on revenue. I mean, $138 billion in revenue for the last quarter. That's just a ginormous franchise. Home Depot was the other one, surprised by 25%. And Baidu came in and surprised by 13%. Those are the key earnings that we had this morning. What's left is API Crude Oil stock change, which happens about 15 minutes after the pit closed this afternoon at 4:30 p.m. Eastern. So let's take a look at what was expected yesterday versus what we got. Yesterday, really expected some sort of a continuation of Friday's trade. I expected it to have a hard time pushing through that 63, 64 area is outlined here, as shown right here. Expected it to have a hard time here, pull back and push through to the 78.80 and regain the next big distribution, which takes us into 200, and then after that to the all-time high. But yesterday was, I don't know about you. I don't know how you traded yesterday, but yesterday was pretty awful. We had impulses in both directions, and it ended up being really a balanced day, but it had the makings of a pretty decent breakout day, but it didn't do any of that. Yesterday pushed down into 136, 41.36. I had 41.31 as the key test area below. So neither of these played out yesterday. Instead, we got this action here. Let me share that with you. Here's the action that we got in our review segment. Well within Friday's range. Okay, so we test down to 53.75 and we move up to 67. Remember, 63 was expected to be the area where we pause. We push up to 67 and then we come off and consolidate. And if you look at the rotations, let's move the rotations up. If you look at the rotations, the normal rotation or the impulse per Sunday's run of the last 20 days, statistically, the historical probabilities show that an impulse is 10 points, and that's what these red lines are set up for. So we have an impulse up, followed by an impulse down, followed by an impulse up, sideways, impulse down, sideways, impulse down, impulse up, and so on and so forth. And that's just the kind of day that it was. So if you're trading impulse pullback continuations, there was a lot of problems with those continuations. They didn't continue. And so there were a lot of back and forth reversals, and it was I felt maybe I was just out of sync, but I felt that it was a pretty rough trade yesterday. I could see that it was balancing out just about in here somewhere, well past the initial balance, well after the first hour. I can see that it was an outside-in trade, that any new low is likely to be reversed. And so, you make a low at 41 1/4, higher low, look for the long, back to the middle. And so what we did is we just snaked around this 50 level all day and just hung out around this 50 level, held on to this lower high volume node from Friday, and yesterday was pretty much a rest day. So if we look at this on the composite, first day of the week, so new box, we are in the middle of last week's range, and we were inside of Friday's range from the top and the bottom, and what we built is a profile that's right on top of what Friday's trade was. So just complete balance yesterday, and this kind of gears us up for coiling, for more of a chance of one side or the other being wrong. And so as the market moves, we need to pay attention as it takes out these highs from yesterday, these highs or lows. You still have to refer back to Friday's highs or lows before the real stop run and the real run is likely to take off. So if we push through the high of Friday, then we're looking at something that might take off a little bit. So look for 41, 41.78 and a quarter gets us into 41.80. Major resistance up there, major level up there. But if it gets through 41.83, forget it. The shorts are likely toast. And then on the downside, 41.33.34 is the area. And as long as we are inside of here today, we are likely to have a pretty choppy morning. So that's what I want to leave you with. If you decide to leave right now, I'd like you to leave with this idea that as long as we trade inside of yesterday's range, which is where we are now at 41.60, we're right in the middle of yesterday's range. As long as we trade in here, it's likely to be choppy. It's a scalping market, and it's for short-term or short-range profits if you do take them. But right now, where we're opening, this is Chop City. It's likely to be Chop City until it breaks. It might break today and run, but this morning, I'm going to encourage you to just chill a little bit and let the market set up. The overnight session. Let me move this camera a little bit. The overnight session, I mean, it ran up quite nice on the open, on the Asian session. Delta is positive, has been positive the entire session. But overall, the volume's not really there. 185,000 is okay. Tests up to 79.50. So we've tested 78 and a quarter, 78.50, I think, or 78 and a quarter, 78.50. And then we went to 79.50 and we keep coming off. So again, 41.80 is very, very important, and you need to keep paying attention to what's happening as we approach that. But what we've done is we've pulled all the way through the bounce of the overnight session right in here, so that we end up with the overnight point of control, the full session VWAP, full session mid above us, and we've transitioned all the way back down to the other side towards the overnight low, and are pushing towards the price that was traded a lot yesterday, which is 41.51. So that's where we are this morning. So one thing I want to, before I move on, one thing I want to remind everyone is that tomorrow at 4:30 Eastern, I'm going to be hosting with Convergent Trading, hosting a public AMA. And this is an important one for many, many traders, a public AMA on making the turn in trading. Nothing's guaranteed in this business, but it'll be a very, very honest conversation about what it truly takes to make the turn in trading, and what traders have to deal with, and what you have to put up with and able to do that. To be able to do that. So I'm going to show you the heat map. Really, again, very just kind of a chop fest here. Not much to talk about in terms of the heat map. The ES is relatively thin this morning, trading relatively thin, so it's not really doing anything here in terms of clear indication of collisions or areas that we would be interested in. It's very, very difficult to read the current action. So I'm going to hop right in and jump into the expectations for today, our plan for today. Here we go. So what are we looking for today? Change our colors. Pop. What are we looking for today? So the way the market has pushed up and rotated over, it's very clear that it found the sellers up top. It did manage to get to the point where it found its sellers and has turned down. And so what does that do? That creates an environment where it's going to be tough for buyers to push through very easily. So to me, this looks like it is likely to see a lot of resistance on the way up. The most likely opportunity here, given the way yesterday flowed. So yesterday, clearly with some spikes up, but clearly yesterday had a downward skew and brought us back into the lower distribution of Friday. Then we break higher, and then we end up with somewhat of a downward skew after testing the high. And to me, it looks like an open auction in range, in value, or just above value. It looks to me like we are likely to breach the 41.56, come back to 50 again. But I'm looking for this area to be supported, and I'm looking for it to push back and squeeze into this 67, 68 area, which is yesterday's high, today's overnight point of control, today's full session mid, today's full session VWAP. And I'm looking for it to kind of settle in here and sit steady. I'm not expecting too much in terms of what the market is likely to do today. There's not a lot to digest. We're not expecting any news. There are a few unknowns left, and we are inside of Friday's range still. So to me, if it starts to move away and push through that 78.50 and it's 80 bid, 81 bid, and so on. Now it's got my attention. Now I'm looking for 4,200, and now we're looking to push through 4,200 and hold up there. Not expecting that as an early play at all. The secondary is failure to maintain these prices, and so it's responsive. It's responsive back up towards the overnight point of control, but the inventory overnight is 92% long. So the expectation is a push higher is not going to be very sustained. And then I'm looking for an impulse and a push down that gets us into the 50 and then starts working its way through to the 36, 34, Friday's low of 34. And then that's where things become interesting. If it breaches the 34, we're likely to run to 20 relatively quickly. So down here, I'm looking for 20. The 34, 37 right here. If the 34, 37 doesn't hold, then we're looking for the one-time framing up, attempting to build from yesterday, failing, and that's likely to push through. And if that doesn't hold, then we're looking at the areas beneath 4104, 4100, and so on and so forth, with a push higher on the close. That's the secondary scenario, but I'm going to throw a third scenario at you this morning. The third scenario is an open, balance out the overnight inventory, test down, drive up, consolidate at the 67, 68, and then squeeze the 78, 80, consolidate above the 80, push the 85 from last week, and then off to the races we go to the 4,200. That's scenario 3. This is a bullish scenario, But given what it has done, given the fact that it found a low on a swing basis last week, given that we've pushed higher on Friday, given that we have not moved away from Friday's range, scenario 3 has a very strong possibility. But the key here is, what does it do at 67.68? If it takes out the 67.68, we see strong lifting and we see good facilitation to the buy side, then long it is for 80. Caution at 80. Good scale out area. If it pushes through the 80, boom. It's going to be short squeeze city. And there's not much structure holding us back from the sell-off of the week before Thursday. So that's how things look. Good luck with that. I want to remind you again to register for the AMA. This is something that I really enjoy doing, and this topic is very important to me. I want you to, I'd love for you to attend. Here's the link. I'm dropping it into the chat, and it's also on my YouTube, on my Twitter. It's also on in the description on the YouTube video, and it's also on the Edge Clear Trader Bite page at the top banner there. Please register, ask your question. You're here, you're fighting to be a professional trader is what I'm assuming. So let's talk about the realities of what it takes to make the turn here. Good luck.